Well, I think this week the U.S. has been the key issues for the whole regional. I think the regional sentiment really followed the what had happened in U.S. Obviously, number one thing is that the U.S. has fallen below the 7,005 level, and that was about more than 12-year high, 12-year low. All right, so I think that is the potential main dampener for the whole region. On top of that, also we have this economic news, and despite Bank Menakis assuring that there's potentially we won't have the nationalization of all the U.S. banks and all that, but still the worries are still lingered around the banking system overall. And also not just about U.S. On the regional market as well, we have a number of countries that announced lower GDP figures. All right, and then obviously yesterday we have Singapore, all right, fourth quarter GDP. Tend to annualize of about more than 16% last year, and of course we have Japan's export plunged more than 40% annually and all that. So all the economic data out there has definitely dampened the trading sentiment overall for the regional market. All right, and but I think as what I said just now, I think the regional market has really performed badly, particularly, the leader is definitely the U.S. market. Yeah, obviously all those sentiments has contributed to the ups and downs on the local market of late, and obviously we have a strong rebound early of the week. We have a sharp fall on the U.S. market, all right, early of the week, and then followed by the small rebound in the regional market and all that. But altogether, I think the regional market does impact our local market performance this week. Still, we have locally, we have our own reason. Have this, like for instance, this Wednesday, the Bank Negara has announced a surprise 0.5% cut on the OPR, overnight policies rate, to 2%, and that was a surprise cut on the negative side, and then it negatively impacts the sentiment, obviously, and then today. The whole market is still waiting for the GDP, or fourth quarter GDP last year to be announced. So I think the figure is definitely a key ingredient for the market going forward, whether investors will turn more positive or will turn more negative. At the moment, we have seen that the KLCI is still maintaining above its key level of 880. Alright, that's a psychological level, and so far it is still above that level. We are still a little bit so-called relief. I think due to the fact that the recent so-called buying support has not followed by a strong volume, so-called, and in fact the overall weekly volume has actually decreased for this week. The average daily volume is actually reduced from compared to last week. So basically with this we are a little bit cautious on the potential of the KLCI maintaining above the 880 level. So if in terms of a poor follow through early next week, that would potentially lead the KLCI lower. So in fact we are a little bit more cautious from the previous days.